Hi everyone, thought I'd make a quick video on, and I say quick, but a video on a trade setup on the euro dollar. Now this is if you want to go long on the euro and expect some dollar weakness. So currently there's a CPR trade. So let me just explain what the CPR trade is, as well as a stop hunt. Now with a CPR trade, you have to understand that you can't just trade at any level or any area. What you want to do is have an edge over your opponent, because this is a zero-sum game. And so to kind of explain it, if you haven't gone through the course, just as a quick reminder, what you're looking for is obvious levels of support and resistance, right, where traders would believe that prices are going to the downside or to a certain direction, and then the traders get caught offside, right? So if we're looking at just this, and at this point in time, this level looked like it was holding, at 1, 2, 3 touches. Traders believe the more times the level is touched, the stronger it becomes. Lots of traders getting short in and around this area. That's nice, pin bars, doji candles, confirming price action, that price is going to the downside. And then all of a sudden you get a situation like this where traders are caught on the wrong side of the market. So they've already committed capital and now they're captured in their position. And as prices come back down, they are looking to exit, their trades. And why that works for us in terms of some supply and demand is because if you've gone short here, right, press sell, then you have to buy to exit your trade. And traders who are typically caught in their positions and going through the pain phase and now want some pain relief, this adds to the buying equation, right? The demand side of things. Traders who got short in and around here and here are now looking to potentially take profit in and around these areas as well. And if they went short, then they're looking to buy to take profit. And traders who are entering new positions, some may not be entering here, but some actually may be entering at this level of support right here, right? So prices may react. Now I'd never say, some people do place pending orders. I like to look for how price reacts at levels. And so what you still want to see is price react at a level. And so there's lots of demand potentially going on around here from a technical analysis perspective, but of course the fundamentals have to line up. And so as prices come into this CPR demand zone, nobody knows exactly where the turning point is going to be, if there is at all. But ultimately, what is going to drive prices higher or what is going to drive prices lower? And so what's going to drive prices higher or lower depends really upon Thursday and core inflation. And so what is happening now is it looks like you've got inflation that looks quite sticky, right? In terms of the Federal Reserve want inflation to come down, but the consensus and the forecast, is actually for inflation year on year is saying that inflation may actually come in higher than the forecast from trading economics. Own economists are thinking that it might come in higher than the 3%. Now, again, nobody knows, as I've said in the message. It looks like inflation is expected to stay sticky, which could mean more hike from the Fed if the forecasted data comes inaccurate. Bear in mind that the economists have been wrong, right? That economists have been wrong more often now for some strange reason, and haven't been through a tough time over the past 3-4 months with their forecasts for some odd reason. If you think that inflation will remain sticky, buying the dollar is a decent idea, but only if current price is at fair value. Please refer to the video that I posted earlier. And also, if you think that inflation should come in lower, which would then basically devalue the dollar, then this would be a good price to enter a long on, say, the EU, if there is a valid entry. So the setup is here, right? And this is what is known as a pre-entry. Again, I went over this in the video, pre-entry and post-entries. And so this is what we would consider the pre-entry trade. Now, depending on how you enter, what you enter on, Whether you're looking for a capture pain candle, or you're looking for just pending orders, or you're looking for a pin bar, you know, I don't know what you tend to look for, and depending on obviously the time frame that you're trading. But this whole area looks like a really nice area for a setup. But the setup itself and technical analysis, you know, will not necessarily work if you don't have the market that agrees with you, right? And the market would agree with you if, from a fundamental, you know, catalyst, meaning that if the dollar, if the data comes in, you know, on the Thursday as being, you know, either supportive or not supportive for your trade, then prices are either going to go to the upside or they're going to go to the downside, right? And so at the end of the day, nobody knows. You can position yourself long if you want, or just wait, right? You don't have to get into a trade. You can wait for prices to come out. Also, as well, you do have a stop hunt below the level. So if prices go below and they come back inside the level, I think that is going to also be a really nice setup. So again, that may happen before the news, and if it does, then pretty much your risk is defined, and your upside potential, if you know the Fed do decide to hold, is going to be a very nice trade to the upside. There's also a really nice unfair auction around here as well, so that needs completing above the market. So really nice. There's been some unfair auctions heading into this lower price action as well. So really nice setups to the long side, but this will be determined by the fundamentals 110%. So if you want to get in, obviously wait for an entry, and if price does come in, or the news does come in and it goes against you, just get out of the trade, right? If you're in some profit, just you can either lock in profits, go to break even, exit your trade, or just exit the trades, you know, cancel your positions, and then because you have to expect prices to go to the downside, right? And so yeah, that's pretty much it. Just thought I'd go over those trade ideas and those trade setups. And so yeah, I haven't decided what I'm doing yet. I'm having a think on it at the moment. It does look like the probabilities are for dollar strength. So for me, if I wanted to get in on this trade, I would really have to wait for a decent pullback, you know, before I get in short. I'm not looking to buy the dollar at these lows. That's an expensive area. I don't want to buy the dollar at an expensive area. It's expensive here, and it could be expensive here. And even if prices, you know, prove and go to the downside, I'm still going to wait for a pullback for prices to then, you know, for me to look for a short trade on the euro dollar, if I decide to trade the euro dollar, right? Because I might be trading another currency that I think is weaker than the euro. So yep, that's the analysis. Hope that helps. Take care and speak to you all soon.